as you will see now. Welcome to my presentation is Investing in Stocks 101. Just a very glimpse overview. It's going to be really basic knowledge, but if you have any further question, please let me know and I'll try to answer to the best of my ability. But first, I would like to start off with a poll in which I will send it to the next screen. So let me know if you can see the poll. It's gonna be titled, "What do you know about the stock market?" That's very correct. It is not doing well recently. Um, I'll close it off in about 2 minutes, but if anybody would like to elaborate on their answer, please do so, and I'll comment and back you up and support your comment. Yeah, you can win or lose money. If you don't know anything about the stock market, I hope you will gain some information about it. Some part of it is based on money. Yes, definitely. I think that's the main reason why a lot of people would like to invest in stocks, where people can buy a share and have some sort of ownership, and that's definitely correct. And we'll get to in our presentation. Definitely, definitely a good way to learn about money. I think to make if anybody would like to make money, it's a good way to learn and how to achieve that. Mhm. That's actually correct. It does have an average 10% return per year for the last 100 years, and it's all about timing. But to elaborate more on the average 10% return per year, a lot of investments that we do have in the United States, we have savings which give about 1 to 2% returns on your money. Um, there's a lot of other stuff too, such as bonds, which gives about 2 to 3%, but stock market has the best return on your money for the future because it also beats inflation and it's a good way to learn about companies as well and to see where it all times in. If mhm. um, to the person who did put average 10% return per year for the last 100 years, do you have some type of relative knowledge about the stock market? Because that's information that someone would have to know by reading a book or even researching on their own. If not, you don't have to answer. I'll just take about another minute and we'll go on to our presentation. All right, I guess we'll continue to our presentation. Please let me know if you see the screen for our presentation titled Investing in Stocks 101. Good, cool, thank you. All right, so we're gonna give a quick overview. In case you do wanna look back at this presentation, please let me know. Um, it's gonna be the overview you see as right here is gonna be the stock basics, the evaluation of stock, company, IPOs, how to buy, sell stock, order types, different ways to trade, dividends, and then the facts and tips of the stock market. All right. So a stock, the stock basics, it's also known as a share or equity and is a type of security that signifies proportionate ownership in the issuing corporation. And to the person who did respond to the poll, you do own a part of the company. So if I buy a share of Chase, I own part of Chase because I have my money invested into there. The stock market is also an exchange. It's a market where all companies come together and have investors invest in their company. And there's a lot of different types of market, but mainly we're going to be focusing on the ones in the United States. Dow Jones, it has 30 companies, and Dow Jones is the company that are on top of their sectors. Sectors meaning clothing, retail, banks, tech, and many more, if anything, electricity, oil. And you can see from our presentation, or the presentation, Apple, JP Morgan, Nike are the top of their sector. And these companies can be in more than one exchange, but mostly, yeah, they could be more than one exchange, as you can see from the S&P 500, which is on the bottom. But the New York Stock Exchange is where a lot of common companies that people may have never heard of will put their money, or will put their company in there. I like to specify on one company that has gained relatively popular in the United States. It's called Alibaba. Alibaba is stationed in China, and they're referred to as the Amazon of China. And since most of the stock market are in the United States, New York Stock Exchange issued a deal with Alibaba to have investors from the United States to invest in their company. And I just added a little bit more information. Delta Airlines is also part of the New York Stock Exchange. And we'll get more in depth about some of the companies if you would like to in the end of the questions. The Nasdaq has about 3,000. It's another company just such as the New York Stock Exchange that has a lot of companies investing into it. You can see from Costco, Amazon, Starbucks, and you see how, yeah, my bad. Nasdaq has basically 3,000 companies in it. Would anybody like to guess how many companies are in S&P 500?
A lot, just because like I heard that it's like it's often quoted like a lot in the market.
Oh, definitely. Yeah, it's always on the news lately. But as in the title, intis, S&P 500 has 500 stocks in the company. So you can see it from Microsoft, Apple, McDonald's, Facebook. They're mostly the top as well of their sectors. Mostly companies that are very relatively known in the United States that we know of. But you'll see a lot how Dow Jones, the whole market's going up or down, or even the New York Stock Exchange. But all these markets are companies where investors can invest in. The market is open from 6:30 a.m. to 1 p.m. Pacific Standard Time. So keep that in mind because investors in the East Coast will have to invest at 9:30 a.m. to 4 p.m. While for us who living in California, we have to wake up early at 6:30 a.m. to invest, or even in the middle of the day. This is standard for most investors. However, pre-market and after hours are available through certain brokers. You will see this when you start investing that the pre-market data for the stocks are either going up or down, and that's because certain investing companies give you the option to invest in the companies before the standard opening time and even after hours, but it's only available through certain brokers, and many apps that we have can't really do that. All right. And another thing is, if you all have any questions regarding this presentation, please feel free to say or speak freely, and that'll be perfectly fine. Okay, we'll move on to the evaluation of the stock. So a company's worth, or its total market value, is called market capitalization, or market cap, and it is represented by the company's stock price multiplied by the number of shares outstanding. And then generally speaking, the stock market is driven by supply and demand, much like any market. When a stock is sold, a buyer and seller exchange money for share ownership. And I gave an example of a market cap example. If Microsoft is trading for $71.41 on a particular day and has 7.7 billion shares outstanding, the company is valued at, you multiply those two numbers together, and that day the company is valued at $550 billion for the company Microsoft. We'll go more in depth about the supply and demand for stocks, but it's just a little overview. For the price to earning ratio, the price earning ratio, or the PE ratio, relates to a company's share price to its earning per share. A high PE value can mean that a company's stock is overvalued, or else that investors are expecting high growth rates in the future. Companies that have no earnings or that are losing money do not have a PE ratio, since there is nothing to put in the denominator. And you can see from the formula on the left that PE ratio equals market price of share over earnings per share. And I want to specify a little bit more about high PE ratio. You'll see a lot of the companies on the side of their little tabs that I'll show at the end of the slide, or when we review a stock, is that a lot of companies will have like a 70 PE ratio, and it can mean that they're overvalued, or it's just right in the spot. A lot of investors or companies have ratings or critics who will give a PE ratio to what the company is really valued at. And in a low PE ratio, if you see something that's low, it can mean that it's undervalued and that the company has a potential to reach higher. And we see this many times. You see companies such as Amazon, Tesla, or even companies that we actually don't really know have a low PE ratio, but future it really increases up. And we'll see later on that Amazon has a high PE ratio, such as Tesla. And then for the evaluation of company, these are I added a few points of how to evaluate a company, because there's different ways to invest. It's good to read the Form 10K, which means it's the annual statement of a company, and that has the purchase, how much they're in debt, how much they're investing in their own stock, how much they're investing in other stocks, and how they're basically doing. It's about the reports and is dealt with by financial advisors. Form 10Q is basically the quarterly update of a stock or of a company. You'll see this very many times. Every quarter, a company is mandated to do a quarterly earnings of how much they're earning per share, and what their financial stability is at that moment. Revenue is how much money they generate. Net income is how much money they generate minus their debts, liabilities, etc. And then earnings and earnings per ratio, we just discussed that as how much their company can be overvalued or valued, such as with the PE ratio. And another thing is, for us, we kind of also think about how a company is evaluated, and this is what I put under qualitative research. And under qualitative research is, how does a company make money? Companies such as Nike make money from ads. They can make money, or they lose money from ads. They make money from retail, sponsors. It's just a number of different ways a company can make money. And it's really different from each of the companies. And we're taking the example of Nike at the moment. So the advantages and disadvantages of Nike. Advantages is that they're worldwide. Everybody could have Nike. Everybody has the opportunity to buy Nike product. But the disadvantages, they have other retail groups who are competing against them. Another thing is the management team. How is their management team doing? How are they going to pitch more ideas to make them stay more relevant? And what can also go wrong with Nike? There can be fraud. There can be many different things, such as a store not making expectations of what it's supposed to do, and therefore can also be liquidating or going bankrupt to that particular store. I want to go to our another poll. It's going to be the same. Let me just pull it up real quick under poll. And I just gave a random company. What are some qualitative research on McDonald's? So qualitative, what are the advantage and disadvantages of McDonald's, or who are they competing with? What can be some problems of owning McDonald's, or like what problems can they face? Definitely worldwide. It's all around the world. If you need me to clarify more, please do so and I'll elaborate. Advantages worldwide, cheap but not so friendly slash safe. D, not healthy. Yeah, it can be unhealthy, definitely. Oh, there's a big shift going to healthier foods. I'm not sure if you all have noticed, but there's this company called Plant Based, I believe, and yes, but Beyond Meat. They're called Beyond Meat because they're Bill Gates just did YouTube video with another YouTuber about it, but Beyond Meat is trying to change the world by making plant-based food taste the same as meat. So that's a really competitive, competing thing on McDonald's because we would like to eat healthier, and if plant-based gives us the option to do so, we might as well. But it's all to our own opinion or whatever else anybody thinks. But yeah, these are some great qualitative research on McDonald's. Another one that it has a big factor is liability and lawsuits, because lawsuits can take a lot of money, and with a proper or experienced lawyer, it is I want to say easy, but McDonald's can have a lot of lawsuits competing with that because of issues that might occur with their food or anything of problems that might occur with the individual. But yeah, thank you all for sharing. I really appreciate it. Great choices. And whoever said Beyond Meat, that's a very excellent choice. All right. We'll go on to our next slide. Please let me know if you see the presentation. It should be titled Initial Public Offerings, IPOs.
We can see it.
Got it. Thank you. Thank you so much. All right. Initial public offerings, IPOs. So we might heard of private companies, and we try to search up their stock, but it's not public. A lot of stocks have done this. Prior to an IPO, a company is considered private, and there's many advantages and disadvantages of being an IPO or doing initial public offering. The company gets access to investment from the entire investing public to raise capital. When a company is private, they only have certain investors putting money into the company. And it can also be easier to establish the value of an acquisition target if it has publicly listed shares. And this would be due to analysts analyzing their share and seeing how much is worth in the future or how much is worth currently. Some disadvantages of an IPO is it can be expensive because you have to maintain a public company. Therefore, you have to have a financial, you have to have lawsuits relating to that, taxes. You will be required to disclose financial, accounting, tax, and other business information. And the way you save money, the way you buy your products, can also be released, which will appear on your financial statements of your products and all that fun stuff. IPOs are very, very risky because some companies can be overvalued at one point and then just fall down. In our next slide, here are the top 10 US IPOs of the last decade. We're gonna take probably about 4 or 5 of these stocks, and we're going to see where they're currently valued out. As you can see, these are their market values. I forgot to elaborate on that, but there were, as you see, Alibaba's worth 21.7 billion, General Motors 15.8 billion. Just take a look at that. As you can see, the tech industry from Facebook opened up in 2012 for 16 billion. Oops. All right. I'm going to share our slide to view our Facebook stock, and then we're going to view Alibaba and Uber as well. So, and these are taken from today's data. As you can see right now, Facebook is valued at 208 per share, but their market value is 593 billion. And this rise over the past since 2012. So you can see, let's go ahead to our max chart. They opened up at $38.23, right? As you can see, the next they start to fall down about to $18, $19, and you can see how risky IPOs can be because you might believe like, oh, they're gonna keep going down, but if you just find out information, I mean, we would have never known in the future if Facebook was gonna take off, but eventually it did, and you can see it from the charts that it gradually rises up all the way to 200, and it keeps going higher. And then you'll see a lot of graphs at the end of February, and this is due to the coronavirus. But you can see how high it goes from $38 per share to 208 per share. And if you're investing 100 shares, you would just subtract 208 from 38, and there you go. You get your total profit. If you take it out at that moment. Another stock I want to show you guys or show you all is Alibaba. And we can see from their IPO, or their current IPO was about 21.7 billion. And you can guess it, but currently it's valued at 523.59 billion. So that's a gradual increase over the course of years. And you can see from the IPOs, it started at 93.89 per share, and you can see it go up, and it didn't really start taking off until 2017 to 2018, and therefore, and everybody started investing in them, and currently is valued at 195.17. We'll go back to our next slide. Is there any other stock that you all would like to look at? We have Snap, which if most of us may know, it's a social media group which includes Snapchat, and then Uber, as you know, came in 2019, and it's a company kind of referred to as a taxi, but I think all of us know what Uber is. If not, we'll continue our slide to continue our presentation. All right, let's continue on. All right, so we're gonna go on how to buy and sell stocks. So you open a brokerage account, Ameritrade, Fidelity, Robinhood, Acorns. Ameritrade and Fidelity can be, and for all this, you would need to have your social security, and you have to have a login. And some brokerage account require you to have a minimum money to be invested, but most of the times it does not. And you want to find the one that's right for you because some have specific types of investing that they may offer. Robinhood and Acorns focus more on apps for friendly user investments, but there's a bunch more brokerage account that you can invest in. You would just select your stock after that. You can select any stock that you might think that has a public or that's a public company, Amazon, Best Buy, Sony. Decide how many shares you want to buy, and then you choose your order type. market order, limit order, stop order, and stop limit order. All right, so a market order is a trade order to purchase or sell a stock at a current market price. And I'll give an example when we look at a stock to see what the price may be and to explain elaborately on that. A limit order is a trade order to purchase or sell a stock at a specific set price or better. Limit order to buy Apple at 120. So if I place that order, if Apple goes up or down to 120, I could buy it or sell it at that price. And then stop limit order. So basically, stop limit is a combination of a stop price and the limit price. So once the stock hits a stop price, the order becomes a limit order. And you can see from the example on the left. So if the stock is going down, you see on the graph that it goes up past 85 on that little top of the line, kind of like a triangle. I have no, oh, here, I have a pointer right here. And then you set a limit and you see the stock going down. So you set a limit at 83. And if you want to limit your loss, you're going to buy it back at 82. So you set a price to sell it at 83 and buy it back again at 82. And this is just an example of what a stop limit order is, because you want to minimize your loss if you're that type of investor, or if you want to maximize your profits. I'm going to go give another example about a market order. Let me just pull up a stock, and we'll continue on with, let's do Apple stock. Okay.
Ricky, I had a question.
Yes.
For the market order, or let's say you choose one, can you stop at any moment and then change it later, or would you go more with the stop limit order?
For the stop limit order?
Yes. Would you be able to like jump back and forth with the different types of orders?
Yes, you can. Explain a little bit more, sorry.
So let's say you choose one of the orders. I choose a market order, but I would want to stop it later. Could I just close it and then move over to the stop limit order?
Yeah, so if you want to do that, you can do multiple orders in like one transaction. So let me go to the next example, and then I'll answer your question as we approach the next. Yeah. So let's see. Can you see the screen that is Apple stock?
Yes.
Okay, so a market order. When you place a market order, and say I'm investing right now and I want to buy Apple at its market price, that price can fluctuate or go down at any given moment, because millions of people are investing at that same time. So you might not get it at that price 302.89. You might get it at 302.86, 302.80. It's just what at that price is at that moment when people are selling and buying at the same time. And then to answer your question, Carolina, when you do a market order, you'll buy at, let's just say 302.89. Then you will set another order to minimize your loss, which is a stop loss. You'll set it at maybe, like, say you want to set it at 302 or 372, and you bought it at 302.89. You set the limit right there, 302.72, and if you believe that that price will go lower, you set the order. Say I want to sell it at 302.72 if it goes down, but buy it again at 302.50. And once that price hits 50, you'll execute that transaction and go from there. And I hope that answered your question, Carolina. I see a thumbs up, so I'm guessing it did.
Yes, thank you.
All right, and we'll continue to our slide now. All right, as you can see from the order types, there's numerous ways to trade. People will come up with their own ideas, have their specific type of trading. Day trading is buying and selling the stock a same day. And to elaborate on day trading is that some brokerage require you to have a minimum of a certain amount of money, about 25,000. It just depends on which company or which brokerage account lets you do that. But you can buy and sell the stock the same day. It's a very risky investing, but if you have the proper technique and knowledge to um, to I guess maximize your day trading, then you can be potentially a profit in the future. But one thing I would like to say about day trading is that a lot of investors who do day trading end up losing a lot of their money because of the risks that's involved in it, because it's considered risky. A lot of people will consider it as gambling, but others will consider it as a type of strategy. So personally for me, I think it's a strategy because if many people are reading about it, if many people are finding out solutions to that type of stock or to predicting their movements, then it can be very valued to do day trading. Swing trading is when you buy on a trend. So if a stock goes down and sell it, stock goes down and sell it when it goes up. I have a picture of a swing trade on the left-hand side. You can see that I want to buy it. Say I buy it at that price at the bottom, right here at the bottom, and then I I view the market every day to figure out when it's going to sell again. And then once I see that it has a huge dip from this top of the curve, I sell it immediately and then just leave it at that and potentially find a different stock that has a swing trade or anything else. Another one is called long-term or short-term trading. A lot of investors or people will really push this to do long-term or short-term trading because a lot of people do not have the knowledge about day trading or swing trading, and it focuses more on the company's values because you can see these companies having profit in the future, and you can see them long-term. You'll see companies such as Chase, Apple, never going away. We see them as long-term. And these companies will continue to rise if they're meeting product demand by consumers such as us or even other opportunities that they might create. I know Tesla from Elon Musk is creating a bunch of new ideas, and we'll see a stock. We'll look at the stock, Tesla stock, and how volatile it is on the after the slides. And another type of a different way to trade is called short selling, and this you predict a stock will go down instead of up, and this is a very also risky type of stock type of trading because short selling, you have to buy it from a brokerage and you buy their stock at that, or you buy their stock at that price. No, sorry. You sell that stock at that given price and then give it back to them when it goes down. If I could explain a little bit better, short selling, you would have to do it from a brokerage account, and say that brokerage account has that stock at this value right here, and then I predict it will go down and it goes right here. I sell it at that price and then give the rest of the stock to him, in which the brokerage loses money and you keep the profit that you gain from that money or from that stock. All right, we'll go on to our next slide. A lot of companies will have dividends, and a dividend is a distribution of profits by a corporation to its shareholder. When a company earns a profit or surplus, it is able to pay a proportion of the profit as a dividend to shareholders. Some stocks pay quarterly, every 6 months, or annually. And dividends are a very key quality to a company. If a company is able to pay out dividends, that means they have money left over to give back to shareholders to keep them investing in their company for future long-term effects or long-term investments. It's a very So if I have 100 shares of a certain company and they pay out a dividend of 30 cents per quarter, you just do 30 cents times 100, and I believe that's $3, or no, my bad, $30. Yeah, $30. And then since the company may pay out their dividend every quarter, you will get $120. You just 30 times 4, $120 every year just from leaving your money in that company and taking the dividends and adding it to your account, in which you can invest it back into the stock or do whatever else you want with that money. And then here are some stock market facts. So I'm gonna go ahead and pull up the Dow Jones all-time chart. All right. Everybody can see the screen okay? It should be a chart that's listed. Got it. Thank you. So let's go ahead and pick all years, and I want to show you all when Dow Jones was created and some significant events that have adjusted or have affected the stock market. So we'll go back to a history lesson. We can see the stock was open for Dow Jones at 1915. So it's been over a year for Dow Jones in the market. And we see it fluctuate up and down throughout the years. And from the history of what happened in 1929, I'm not sure what happened in 1916 or 1920 relative to the stock market, but in 1929, a lot of investors were investing in stocks because they just saw profit, but a lot of companies were being too overvalued and then eventually fell down. And you can see it has a dramatic push over the course of 3 years. And you can see a lot of companies went bankrupt in 1929 or throughout 1932. But it eventually rises back up again. And then as we go through the world wars, you can see it fluctuate up and down because of the World War. And then World War II ended about 1945. And then we also see the chart keep gradually getting up and then eventually falling back down again in the 1960s to 1980s. I'm not sure, there's many significant events that have happened in that time, but no major ones. Well, no ones that I can't really depict it because I haven't retained that information. But if anyone has that information, please let me know. And then we can see from the 90s that it goes up, and technology starts to increase as well. I mean, we start to get computers, we start to get smartphones, we start to get anything that our lives relates to currently as of now. And then we can see from February 2000, and then 9/11 hits, unfortunately, and we see it go back down again. And it takes a significant toll because a lot of companies or even airline companies were thinking about how to add in security for the airports, and even in general, it changes the whole world. And then we see it go back up. And does anybody remember what happened in the 2008, 2007, and why it went down? If not, it's a reminder of what had happened in 2008. It's the recession that had happened, which causes all the stock market to go down again, unfortunately. And after that rebuild from 2007 to 2009, or after 2009, we see it go back up again. And like little significant events that have happened throughout this year, and then we see from March, let me just go ahead and pinpoint it. But we see from March, January, February, March that it goes back down. And the markets are kind of going back up. Let me just adjust this to 5 years, but we see that since January that it goes all the way down. And then March was the peak crisis of the United States for COVID-19. And it goes back up in April. April was a strong year for the stock market, which was really surprising. And currently, as of today, we don't know what's going to happen again. But that's a history lesson of what had happened in the stock market throughout the years. All right, I'm gonna share it back to the next screen. And if Warren Buffett was one of the top investors in the stock market who invested very early on in his career, and he has become one of the top investors in the company. As you can see, the picture from the left is Warren Buffett, and he has his company Berkshire Hathaway, which also invests in his company and also has other companies investing in their company. And currently, as of right now, Microsoft, Amazon, and Apple have the top market caps. Microsoft is valued currently, but these are currently at 1,050 billion or over a trillion. Amazon 943 billion and Apple at 920 billion. All right, and then one thing I would like to give off is the stock market tips. There's a lot of information that is available to us to do our own research about stocks, and Yahoo Finance, New York Times, Monthly Fools are news articles that give us that information about certain stocks or what's happening with the stock. It could be lawsuits, liabilities, or anything. And another tip is that don't put all your money into one stock, because if one sector meaning retail, tech, airline, goes down, then all your money goes down at that point too. So if you invested at different sectors, the tech industry could go up, but then the airline companies could go down, which you kind of, depending how you diversify your income or diversify your investments, you can have that neutral balance between the companies. And then reading lots of books gives you a lot of information on how to invest, because it gives you strategies that investors have used to be potential profits in the future. One of the greatest and top investing book of all times, and this is by many analysts and critics, is The Intelligent Investor by Benjamin Graham. And Benjamin Graham was Warren Buffett's mentor on how to invest in stocks. And another thing is to keep your emotions out of the market. Many investors will take their money at that point where the stock goes all the way down because it was having a bad day, but then the next 3 days it just rises back up because other people are also investing in it and buying it at that price where they would like to buy it, and then eventually goes back up again because of the supply and demand. And a lot of people I have talked to do forget to file taxes for stocks. And that's one thing I would like to keep in mind is whenever you make profits from stocks, you have to pay taxes. And there's two different types of taxes on long-term and short-term profits. Long-term gets tax deductible at a certain price or a certain percentage, while short-term profits get taxed at regular income. So keep that in mind, and don't forget to file your taxes for stock, because a lot of companies or a lot of brokerage accounts will give you a stock tax form for you to file taxes. And that's it for my presentation. Does anybody have any questions or would like to give their experience on what's happening in the stock market?
I can.
Yeah, go ahead.
because like I know like this like how like the whole stock market did crash and like recently like in March, and then I remember I took a finance class 2 years ago as a freshman,
Yeah,
and I remember my professor like mentioning how like we're overdue of a stock market crash, and that if it does happen, like just keep an eye out. And so like unfortunately it did happen, like not so long ago. And then I remember he emphasized how like one thing that he learned is like to not be scared of it. Like people see it as like a bad thing, but it's actually something like really interesting, like to find like another source of income and to like make a profit. And so like he even emphasized like to be smart but also to like be curious to see like what's in the market. So I actually messaged him about it, and then again like he gave me some like feedback on like where to start off, especially like college students, and like some like discount like brokerages. So like for example like Robinhood, like I currently have Robinhood, and I've invested in like three things. So I invested on like a pharmaceutical company and two transportation ones. And like I remember one thing that he told me is kind of like to see like their overall history, to see like how they did financially like before and after, to see like okay they may be down now, but like if it showed that they were increasing like before like the stock market crash, and they do have potential to come back up, right?
yeah,
And
definitely.
like I liked how you mentioned like the whole like diversifying your like whenever you do get a share, because yeah, it's like really important to get like little aspects of like what the market has for you. Because if you just invest in one place, it's just like it can go either good or bad. And if unfortunately it does go bad, like then you're probably gonna lose more money than if you were to like put in, and if you were to invest in other areas as well, like you have those as backups too. But yeah, I think it's really cool.
Thank you, Andres, for giving your feedback on about the stock market. It's very interesting to know others' perspective about the stock, and it just gives information on what others view it as, because others may view it negatively or positively. It just all depends on personal preference, because the more you start talking about stocks, it becomes like a different language to others, but it starts to become really interesting because you know what certain companies are doing, and you may know that certain products might be coming out for certain companies. It's very interesting to know. One company I would like to view really quickly is Tesla, because we Tesla has been I would say very, very volatile in the past years, but we'll take a look at it currently. It's currently viewed at 782, but the market cap is viewed at 147 billion. A lot of companies will adjust their price, such as Apple or Microsoft will adjust their price make to give others investors such with low income the opportunity to invest in their company, because investors may not have the income to buy one share of 782. So it's kind of called like a price cut, in which you get two shares of it instead of one share. It's just kind of you're retaining the same profits, but it's a very interesting thing to know about uh, how their market caps are valued and what's happening. But as you can see, from the start, it was valued at $19.20, and eventually it just stays like gradually settled at 210, 200, 325, and then out of nowhere, I'm not sure what happened, but I think a lot of companies were also investing to Tesla, and what Elon Musk was giving at his presentations, that it just jumps up all the way up to almost 1,000, 900. It goes all the way up to 900, and then falls back down because of the whole coronavirus situation in February 21st, 2020. Goes back down, but eventually climbs back all the way up to 782, which is surprising. It's very interesting to know how these graphs can give us a detail of what's happening in the past 1 month, 6 months, or year to date. And we'll go back to our next go back to our presentation. If anybody has any question, please let me know. Other than that, here's my works cited. Go ahead. Sorry.
Yeah. So I own shares of a REIT called Washington Prime Group,
Yeah.
and I noticed from Yahoo the other day that the New York Stock Exchange put them on notice and said, "Hey, you don't meet the minimum requirements for stock value to be traded here, so you need to increase the price of your stocks up to $1, I think it was, because
Yeah.
currently it's going up and down between 60 cents and 90 cents, depending on what day of the week it is. But how does a company just decide to increase the value of its stock? Like, how does that work? How would they even comply?
That's very hard to kind of like get a company to get their price at $1 because in order to do that, it's kind of driven by supply and demand from other investors who are investing in their companies. And since it is a penny stock means lower than $5. It's very risky or volatile, which meaning going up or down, to get a company to go up $1. If it goes up to $1, then people who want to take it out at that price, because they may have 1,000 shares at 90 cents, and then out of nowhere it goes up to $1. Some people will sell that 1,000 shares and take that profit very quickly to get rid of. So 10% of 1,000, 100. They'll take that $100 profit really quickly to get, because they know about that penny stock. I'm not sure how companies will get that stock to go up, but companies can invest their in their own stock to make that price go up. And that's what I mean by driving by supply and demand. So if they have leftover cash or leftover income to invest back into the company, then they can get that price all the way back up again.
So they would have to buy their own stock to cause the price to go up in order to comply.
Yeah, they would have to have investors. It's mostly driven by like supply and demand, because yeah. Other than that, it's very hard to, because you would need to meet with the financial management to also talk about how to get that stock back to 1,000. And since it's very at a low price, 90 cents, it should be very easy, but well, not very easy, but it would cost a lot of money, probably over like $1 billion or $1 million, to invest in that company to get it to 1,000.
Yeah, they had to. Unfortunately, because of this whole virus thing, the value of the stock dropped by like 75% or something since I started investing in it. So I've now got a stock that's worth about 25% of what it was when I bought it, and they had to cut their dividend. They manage like mall real estate, so this is like a double whammy, because not only are they suffering from the same thing everybody else is,
Yeah.
but the recovery for them is going to especially suck, because they are real estate for malls and nobody's going to the mall. So when the quarterly income reports are given and nobody has been going to the mall, people are just going to dump their stock. I have no idea what I'm going to do.
Yeah, it's very, very, very risky since all malls were ordered to close for a time being. But when companies start to go back, or when this whole pandemic is coming to an end, these stocks can go back up. I mean, real estate definitely should go back up, because everyone will have to pay rent for their mall, to own a property in that space. But right now, everything's kind of on hold at the moment, and we can see that with rent happening at the moment. And to be kind of stagnant at that price, it's very, very difficult to get it back up. But not sure. I mean, it just, if you have the proper research and if you have very optimistic thoughts about that stock, then I would just keep thinking optimistic about it. If not, minimize your loss and then invest in a different company maybe, but that's up to personal opinion.
Yeah, I've been playing with that idea for a while. It's really hard to sell it when it's down 75%. You know, it's like you haven't really lost until you sell at a loss. So
Yeah, definitely. But thank you for sharing out your experience with the stock market. Other than that, this is my works site. If anybody else has questions, please feel free to speak out, and then I'll answer it to the best of my ability. But here's my works cited page, and I would like to thank you all for attending my presentation. It was really just thank you. Yeah,
Thank you, Ricky.
yeah, no problem, Andres.
Thank you, Ricky.
You're welcome.
Thank you. Thank you.
Other than that,
Thank you.
I'll stay on the line if anybody else has further question. But other than that, this presentation can be concluded at this moment.
Ricky, I have a question.
Yeah,
Have you started investing, or are you like planning to?
I have been from my personal experience. I have been investing since 2017,
Wow.
and I just at that point, at some points, I just let my money go. At that point, like I just left my money in Microsoft, and it eventually went up, and then I took it out, and currently I invested it in some airlines, but
Oh yeah. Uh-huh.
the airlines are going down. So right now I'm not taking a loss, but I'm just leaving it there and then hoping, staying optimistic about the future.
Yeah, I actually invested in 2 airlines like 3 weeks ago. Me and my friend did it, and we were just like thinking like it's probably gonna go up just because people are gonna want to travel again later on.
Yeah,
Yeah, so hopefully that's cool.
yeah. When this whole pandemic ends, everybody will go back to traveling. I mean, prices may be low, but since the prices are low, more people are going to take that opportunity to take a plane trip to somewhere they would like to go,
Yeah.
which the supply and demand of airlines.